Trust, or REIT. For those who aren't familiar, a REIT is a company that owns, operates, or finances income-producing real estate. It's a way for everyday investors to get exposure to the real estate market without having to buy, manage, or maintain properties themselves. With WHLR, you're essentially buying a piece of a portfolio of commercial properties, shopping centers, office buildings, and more. The idea is that these properties generate rental income, which is then distributed to shareholders in the form of dividends. It's a model that's been around for decades, and it can be a great way to diversify your portfolio and generate steady income. This one's a REIT, so you're basically investing in property without ever fixing a leaky faucet. No late-night calls about broken water heaters, no dealing with tenants, no worrying about property taxes or insurance. WHLR takes care of all the day-to-day management, and you get to sit back and collect your share of the profits. It's a hands-off way to invest in real estate, and for many people that's a big selling point, but like any investment, it's not without its risks. WHLR focuses on retail spaces, but let's be real, the retail sector isn't exactly thriving right now. The rise of e-commerce has put a lot of pressure on traditional brick-and-mortar stores, and many shopping centers are struggling to attract tenants. Empty storefronts and declining foot traffic are becoming all too common. WHLR has had to adapt by rethinking its tenant mix, investing in property upgrades, and exploring new ways to drive traffic to its centers. But the challenges are real, and the future of retail is uncertain. If you're considering an investment in WHLR, it's important to understand the risks. Will they be able to fill their properties and maintain rental income? Or will they be forced to lower rents and accept higher vacancies? These are the questions you need to ask. They pay dividends, which is nice, but watch those earnings reports, they tell the real story. Dividends can be attractive, especially in a low interest rate environment, but they're only sustainable if the company is generating enough income to cover them. If rental income drops or expenses rise, those dividends could be at risk. That's why it's so important to keep an eye on WHLR's financial statements. Look at their occupancy rates, their debt levels, and their cash flow. Are they growing or are they treading water? Are they investing in their properties or just trying to stay afloat? The answers to these questions will tell you a lot about the company's long-term prospects. Last up, Forta, the crypto. Now this is a whole different ballgame. Forta is a blockchain-based platform that focuses on security for decentralized networks. In a world where digital assets are becoming more valuable and more vulnerable, Forta aims to provide the tools and infrastructure needed to keep those assets safe. Their technology is designed to detect threats, monitor transactions, and respond to attacks in real time. It's a critical piece of the puzzle for anyone who